I'm here with Greg Jemmeson from Jemmeson Fisher Solicitors and Accountants. Good afternoon, Greg.
Hey, Brian.
Our subject this afternoon is all about structuring your business. So from down the end track when you want to sell it, how should it be structured to maximise it?
Okay, Brian. Well, one of the biggest things about a real estate business is obviously the rent roll, which we know holds the greatest value on the open market. So one of the things in the past is if I've got a real estate business, I want to sell my rent roll. Because of the situation with the Property Stock and Business Agents Act, I have to re-sign all of those agreements in the name of the purchaser of my rent roll.
Yep.
Traditionally, even a well-managed sales process, you will lose between 5 and 10% of that rent roll. And given that each management is worth between $5,000 and $10,000, that's a significant amount of money.
A lot of money.
So what do we do to maximise the value of this rent roll? One of the things we've done is, what we do is we set up another corporation which obtains a corporate licence, and all new managements that come into your business go into this untraded entity. They sit to the side of your business. You can have a trust structure underneath for asset protection and for succession planning, but by putting all of those managements there, they sit in this company, and then when we decide to sell our business in years to come, instead of selling the rent roll and re-signing them, what we do is we sell the shares in this company, this untraded company. Now, there are very few objections from solicitors and accountants in buying an untraded company because there are no liabilities. There's no employees, there's no lease, there's no equipment, would have been covered by professional indemnity. So what happens is then the purchaser buys the shares in the company, adds it onto the side of their business. And what we have here is a 100% transfer of your rent roll. We maximise the value of it.
That means no re-signing of the agency agreement.
No re-signing of the agreements. And the other important point we have here, it's the beautiful thing we call tax minimisation. If we sell a standard rent roll, we have all of the implications of capital gains tax. So if we have a brand new management which we grew organically, then when we sell that, we have maximum capital gains tax on it. By selling the shares in this untraded company, we're able to then draw on all of the small business capital gains tax concessions. And in some instances, we're able to save the vendor hundreds of thousands in capital gains tax. Not only do we maximise 100% transfer, minimise the tax, and everybody's happy at the end of the day.
Look, that's very good advice. Excellent advice indeed. But I think I should say, if people want to know more about that, they can certainly give you a call and you'll chat to them.
Certainly can.
Thank you very much, Greg.
Thanks, Brian.